Okay, the purpose of this video is to show you how to do transaction 2 in Unit 4, Activity 2. This is the adjustment journal entries. So again, this is for transaction number 2. So this one has to do with making an adjustment with regard to prepaid expenses. So in this example, our company or our business has decided to prepay for our insurance policy. So instead of going month to month and paying a certain amount per month, we paid a huge amount at the beginning that's supposed to last us for a long period of time. So in this example, in transaction 2, we've bought an insurance policy that's supposed to last us for 4 years, and it cost us $6,000. And so what this transaction is telling us or asking us to do is to make a adjusted journal entry for May 31st, 2015. And so really what it wants us to do is figure out what 1 month of this insurance is costing us each month. And so that way we have an idea of what our expenses are month to month. And so that's where the adjustment comes in. Because as it stands now, on our books or on our balance sheet, all we'd have there is our prepaid insurance for $6,000. But that doesn't do us much good past the first time that we put that $6,000 in. We want to know how much of that $6,000 has been used up as we go along. So for this one, we're just going to find out how much of the insurance has been used up since the last journal adjustment, which in this scenario would be April 31st, 1 month before the journal entry that we are preparing now. So the way that we figure out what we're going to put in the journal here is we first have to figure out, as I said, how much this insurance policy, this prepaid insurance policy costs us per month. And so to do that, we want to focus on these numbers here in the middle of the transaction. So $6,000 is the total value of the insurance policy, and it's supposed to last us 4 years, as I said. So in order to find out how much it costs per month, we just have to do some simple calculations. So first we need to divide 6,000. So we'll put 6,000 into our calculator, and we're going to divide that by the total number of years that this $6,000 is supposed to last us. So we shouldn't have to buy insurance for another 4 years, and we spent $6,000. So we're going to divide that $6,000 by 4. So if we divide that by 4, that gives us $1,500. And $1,500 is how much the insurance policy is costing us per year. All right. And so, as I said, we want to know how much it's costing us per month. So we're going to divide that $1,500 by 12 because there are 12 months in a year. So we'll divide 1,500 by 12. And that gives us the amount that we are spending per month on insurance. All right. So this number is the one that we are going to be using for our journal entry because it wants us to list how much money we've spent or how much money has been used up on our prepaid insurance policy this month. So since April 31st, 2015, we're preparing this journal entry for May 31st, 2015. So we want to know how much we spent on insurance this past month for the month of May. And so the answer to that is $125. Now, the next part is figuring out which accounts that we're going to record this in, or which accounts this transaction affects. So our debit is going to be our prepaid insurance expense account. And so this is one that you are probably not familiar with yet, or we haven't really dealt with yet. We've dealt with expense accounts in previous assignments, but we haven't had a prepaid insurance expense account. But all that means is this is the amount of money that is leaving our business, that is no longer available to the owner, that we've paid out to somebody else, and we just label it with whatever it was that we spent that money on. So in this case, it's prepaid insurance expense. And so as I explained in the last video, expenses, if you're adding to them, are always a debit. And if you want a explanation of that, watch the video for the first transaction, and I talk a little bit about that. And so the amount that's going to go in there is that 125 that we calculated before. That 125 is the amount of money that we've spent in the past month on our prepaid insurance, or the amount that it is devalued over the last month, or the amount that we've used up over the last month. So that's our debit, and then that means we need a credit. And this one is just our prepaid insurance account. And this is another one that previous to this assignment, we haven't used or talked about or heard of, the prepaid insurance. But this is an asset account. So we consider this an asset account because when we first bought this account, when we first bought this insurance policy and we spent $6,000 on it, that means that we as a company owned $6,000 worth of insurance over the next 4 years. So in the same way that when we buy equipment, or we buy a computer, or we buy office supplies or anything for the business, we then put that stuff in our assets, because that's that's considered value in our business. And it's something that we keep and we hold. And so we're going to credit our prepaid insurance account. This is in the asset column. So remember that credits in the asset part of the balance sheet have to do with decreasing that particular account. So we are decreasing the amount in our prepaid insurance account, our prepaid insurance account, which is an asset account, and we are decreasing it by $125. Right, so there was a certain amount in there before, and now it's gone down $125. So that is the transaction number 2 adjustment. I will cover transaction number 3 in the next video.